sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. Now, you may have a traditional investment mix of stocks, bonds, and cash, but do alternative investments have a place in your portfolio? Brent Wilsey, president of Wilsey Asset Management, has some rather strong opinions on the subject.
Yes, Roy, I do have rather strong opinions, and these alternative investments, I call them the house of cards. And I use that same terminology probably about 25 years ago when I saw the tech bust coming. I was about a year early, but it eventually did happen. And I tell people, house of cards is where you keep building it. You put that last card on top, and all of a sudden the whole thing just collapses. That's what I'm seeing with these alternative investments. And let me explain what they are, because your traditional investments are your stocks, your bonds, money markets, cash. Those are your traditional investments. Your alternative investments are ones, and ones I hate the most are what are called private equity, private loans, and private real estate. Now, these are sold to you. You will not buy these yourselves because they have to be sold to you. The reason they're sold to you is that your broker says, oh, you're tired of seeing that market fluctuation, we got inflation, we've got the wars going on, all this stuff. You need to get out of those risky investments in stocks and buy these alternative assets because they have no market fluctuation. Well, while that is true, they don't tell you the difference between market fluctuation and volatility. The risk on these alternative investments is actually higher overall, and risk is when you lose all your money. So this is what you have to understand about these alternative investments that are being sold to you by your broker. Now, I'm going to give you an example of a company called Hamilton Lane Private Assets. It's a private equity company, and they actually buy stakes from other investments and put them into their portfolio. Now, they'll buy these at a discount. And back in 2024, about $162 billion in secondary deals were done at about 11% discount. They paid about 89 cents on the dollar for each one of these. Now, what happens magically, which is surprising to me, is they take that asset that they got 11% discount on, and they put it in their portfolio at full value, which is just wrong to me. If you take that 11% of the $162 billion, about $18 billion that just magically appeared back on the balance sheets. So these are things that they do, and you got to be very careful with them because you don't see these. And you're stuck in these investments for probably 5, 6, 7 years. And I tell people, from what we've seen, only about a third of people will actually make money off of these. The other 2/3 will either break even or lose money, and you can't get out of them. They're very hard to get out. They're non-liquid. That's why you don't see the market fluctuation from them. So you want to be very careful with these, and the fees just kill you. The fees like Hamilton, the incentive fees they earn are 10 to 12.5%. Many times there's an upfront charge of 5.5%. Placement fee of 4%, redemption fees, the fees go on, just ridiculous with these alternative investments. Stay away from them. If you have them, you're probably stuck in them, but do not get any more alternative investments. They're very risky. All this information comes from our newsletter. The Smart Investing newsletter goes out every Friday at 5 o'clock on our website. Other items you'll see is tariffs are still not impacting inflation yet. The disappointing Cybertruck from Tesla, you got to read this one. I was surprised what's actually going on. And then the tidal wave in Bitcoin, well, that continues to build. So all this on our website, smartinvesting2000.com. Again, smartinvesting2000.com. Roy?
Thanks, Brent. Appreciate it. The preceding portion of Good Business San Diego is sponsored by Wilsey Asset Management, and we will be right back.